Hi, I am Renuka Devi. I am working as an assistant professor in Dr. S.N.S. Rajalakshmi College of Arts and Science. I belong to Business Administration Department. In this video, we are going to discuss about the residential status of the individual person or any other entity. Okay, so previous videos we have to discuss regarding the purpose of taxation, characteristics of taxation, types of taxation. These and all the cyclical we have to discuss. Okay, students, right now we are going to see about the residential status in the tax system. Okay, so in India we are going to follow some important status, how to follow the residential person and what is the main purpose they have to pay the tax. Okay, what is their main eligibility, these and all we have to discuss in this video in detail. Okay, students, first of all, what is called residential status, why we have to study this concept. Okay, what is the purpose we are framing this particular topic, we have to frame in the BBA curriculum. Okay, actually first I am going to discuss and explain about the residential status of the Indian system, what is the procedure they have to follow. Okay, do you clear? The residential status is nothing but the tax incidence on an assessee, depends upon the residential status. And also for instance, for example, I am telling whether it is an income accrued to an individual outside India. What do you mean by accrued? Can anyone know? Can you explain that? Accrued is nothing but they are earning their income. Okay, as an individual person or the company, they are going to accrue the income in the particular assessment year or the account or year. Okay, accounting year, that time they have to taxable in India depending upon the residential status of the individual person in India. Okay, suppose similarly we are taking another example. In case if any of the person, whether it is an income earned by an abroad country, okay, that foreign, might be in Australia or US. Okay, suppose that person they have to earn their income in any abroad country. Okay, or sometime they might be getting the income in the Indian national. Okay, at the time that particular Indian residential, it will be depending upon the status of the individual rather than his citizenship. Okay, it's clear? So the previous one they have to based upon their residing in India, how many days they are residing in particular assessment year. Okay, what do you ask? Assessment year. Okay, assessment year is nothing but already we discussed in the previous video. No, that assessment year is nothing but they have to calculate the year starting from the financial year. Okay, that is a April to March. Okay, that is called the assessment year. They have to calculate the, particularly in IT return, they have to follow the assessment year. Okay, that is the, that assessment year only we have to calculate for their Indian citizen, how many days they are residing inside the India. Okay, suppose they are residing in outside India, that also we have to calculate for the residential status category. Okay, next we move to the some important activities will be making the way of the developing their determination in the residential status. Okay, so suppose we are taxable entity, it will be, can be making as an individual, either in the individual person or Hindu undivided family, it might be in a firm. Okay, or association of person and joint stock company, sometime it be in any other person. Okay, so these and all we have to consider and determine the tax entity. Okay, this is the way only we have to calculate the residential status under the tax system. And also students, we have to explain that residential status can be categorized in two important category. Okay, the first one is other resident, that is a individual person, and also the other category of person. Okay, based upon their residing days inside the India, we have to categorize the two important category, that is a resident and non-resident of India.